What is going up, everybody? I hope everybody's having a fantastic day today. So we're going to be talking about how to manage your risk when trading stocks here. I'm kind of looking at my other computer here just to make sure we are good to go, and I think we are. Let me turn off my fan here. All right, so we are ready to rock and roll here. So this is ticker IO. Actually, we're going to choose a different stock here. This one, we all know AAPL, Apple, and we're going to be talking about how to manage your risk when trading stocks here. So as you guys can see, there's a pretty hard resistance at about 228. You know, it looked like it tried tapping that in pre-market and got rejected and just has continued to fall down. So now if let's say you wanted to make a trade on this stock, there's two things you should understand and kind of two things you should do. The first thing is find support and resistance lines. So as you guys can see, I drew out the resistance, some support, broke support. So now it looks like it found a new support at around 2270. So now this is when you can start making trades and pretty much start scalping this for about, for anywhere from 1 to 2% returns, maybe more, depending on the volatility of your stock. Since this is Apple, we all know it doesn't move too much, probably anywhere from 1 to 3% is pretty much its average. And so you would really have to load up on shares to make any sort of money off this. But okay, so let's say so after you find support and resistance lines, the next thing you should do is see if a trade is available, and this is when you start to manage your risk. Because if, let's say, you just automatically hop in a trade, you could be literally buying up here, or you could be buying here, even though you know that there's a resistance here, and it got rejected once, and it might do it again. It wouldn't be a good risk to reward ratio. So what I always do is, let's go kind of the last day here just to make it a little more cleaner for you guys. So let's say you guys knew that there was a this one, it didn't really move a whole lot, so it's hard to do it. Let's do here. This will be a little better. Let's go. Whoops. All right, so let's go here. The only reason why I'm picking something out is because it's a little easier for you guys to understand and kind of see where my head's at when I'm talking about some of these stocks here. So now there's a new low of 216.47, and you know that this is a pretty hard support just because it tapped it, and it almost tapped it twice here. It tapped it here and popped back up. And there's a hard resistance here at, I can't click at it. But anyway, so there's a hard resistance at about 22.43. So now this is when you can pretty much start making those textbook trades that I always talk about. I'm just trying to get everything kind of cleared out for you guys so it's a little easier to see. Alright, so let's say you guys saw the stock after this first day right here, and you say, okay, this stock has had a previous support at 216.47. Let's just say this is pretty much what you saw. So it has a 216.47. So what I would do is I would say, okay, that's set an alert for a little above it so I get notified right before it. So I would left click here, go down to create an alert, and now all you do, you make sure it's at the correct price. You click create, bam, there it goes. So now you don't have to make a sloppy trade when you trade this. So that the day continues to go on, and within the first minute of the market open, it popped and our alert gets triggered. Now, most likely we're going to say, okay, and we're not going to buy all the way peak bottom because no one really does. So let's say we bought at 217.50. Now, 217.50 is a pretty good opportunity to buy, just because it's at $0.50 and we can get some, some support off that. Because buyers tend to be more heavy on whole dollars and half dollars. So now we say, okay, let's see what this stock has previously done. So now we look and we say, okay, this stock has hit a low of $16.47. So let's set our stop at $16. So we were risking. Here, wait, I want to get it perfect. Okay, 1601. That's what it is. So let's go to drawings, tools, trend lines. All right, so let's see what we're risking here. We're risking 0.6%, and so that's about, how much was that? I didn't even see. $1.42. So we're risking $1.42. And the only reason why I knew that is just because it had that support. And I know if it broke that, then a lot of short sellers would start stepping in and say, okay, this thing's going down. It hasn't been this low since, the other day. So let's try to get this back down to 210 area. But if it bounces, a lot of buyers are going to be more heavy towards it, especially down here in this low area. This is when a lot of buyers will say, okay, I'm getting a good deal. That's load up on shares, and we can get that pop back up. So now, there's a pretty hard resistance if you look at 219. So this is where our first resistance path is going to hit. So this is a $1.81. So now we're risking 140 to make 180. That's not an ideal scenario, but we know that this is pretty hard and it has a very strong possibility of pretty much falling down. So now we're going to set our stop. Let's see if there's a $0.50 anywhere in here. All right, so we could set our stop at 18.50 just because. Oh, that looks pretty confusing for you guys. Okay, so we set it here. I know you might just be like, oh, you just put it right under it just because it might be easy to do that. Well, no, 1850 is a good resistance or a good support again, because buyers tend to be more heavy towards whole dollars and half dollars. So now we say, okay, let's let this thing ride out. It looks like we got a doji, and if you guys know anything about kind of charts, dojis are a reversal candlestick. And so after that red, this doji looks pretty good for the buying side. So I wouldn't even worry about my stop on this, and I would literally just continue to ride this wave of momentum. And I most likely would not wait all the way up here, just because it looks like there's some previous resistance here. I'd most likely sell out at 21.55 because there was a previous resistance here, and this one would be a lot stronger because of how fast and how much the stock's moving. So now we risked $2. We risked $1.40 to make $2.30, which is pretty ideal. That's about a 1-to-2, 1-to-3 ratio. That's what I always look for. It's very hard with these large companies, but I just wanted you guys to see that it's possible with pretty much every company out there. Let's pull up another one here. Let's pull up NIO again. And just to show you when a stock is, moving this much, I don't trade it the second day after a huge gain like this, just because it's unbelievably risky. It's up 65% during the day. It continued to ride momentum during the market hours, and I don't even know how much it was up. And it was up 16% when the market opened. This thing's just doomed for trouble. Just because it's a recent IPO, it has a ton of volume. The spreads on this thing are crazy. The volume on this is nuts. This thing could easily wipe out an entire trading account like that. And the reason why, if let's say you bought right here, let's say literally anywhere that you can just pick a spot on the map and say, let's say you bought it here during pre-market. That there's a resistance line here. I know that's not straight, but there's a resistance line here, and it would fall, but you get that momentum and it put back up. But still, you always want to check your resistance levels and support. That's one of the first thing I can recommend is don't trade trends and always check support and resistance lines. Manage your risk, and just from those three things, you can be a profitable trader. So this is my Excel spreadsheet that I always keep track of, and this is another way to really keep track of your trades and to manage your risk, even from this. So let's say this was last month's trades. I had over $5,000 in profit, and I only had a $135 loss because I know. That last month test of highs, this August, test of highs did not work. So during September, I didn't put some of mine in. I'm not gonna use this strategy unless I see an ideal setup. That's what most likely would happen with IZEA, and it still didn't even work. This setup doesn't really work for me. I don't know why people use it. I don't. I like support bounce and gap and go. These should be support bounce. I don't know why it says support break. Unless it was a short. Yeah, which it was. Yeah, that makes sense. But yeah, so always keep track of this because now this month you can be, okay, this stock's about to test new highs and it could get enough more volume and push up. Or you could just say, okay, last month I did this, it didn't work. Let's see what happens when this stock tests new highs if he uses that as a resistance line and falls back down. So that's pretty much how I manage my risk. I always, keep track of everything. Every trade I make, I put it in there. Only when I sell it. So if I'm holding a position, I wait until I sell it, then I go in there and put it in. That's just how I work. So that's it, though. I hope you guys enjoyed this video. If you have any questions, please sure to shoot me a comment, shoot me a question. You guys are more than welcome to join my free chat room right in here, guys. It's pretty cool. We're starting to get a lot more people going in, and also you guys can go check out my MVP Investors page here. We have just over 749 members that are all motivated entrepreneurs that want to talk about trading. So that's it, though. That's how I manage my risk. Super easy, super fun. Remember, always stay happy, stay positive. Everybody have a great day. Peace out.